Okay, so let us take probably yesterday's candle. Okay, this is Thursday. This is an expiry day, right? So let me remove all my drawings, or I'll park it somewhere so that I need it later. Okay, I'll park everything at the bottom because I need to pull it and use it later. This I will delete. This is for today. Okay, so let me make it big. So this is yesterday's candle. That is 86. That was during the expiry. As you can see, the market started looking a red candle, but if you see, there is a long wick, and so that means when the market was going down, and within as it touched a certain level, the buyers came in and pushed the price up. So it is getting a support at the lower level. That's what this wick means. That long wick always is a good sign of a bullishness. So if the same wick is in the top, if you have a wick like this, right, at the top, and the price closes below, that means the sellers are dominant and they're coming in and they're pushing the price down. So these kind of a pin bars are very, very critical. These are the price action pin bars. So same way, right? When the market open, again, this is a 5 minutes chart of Bank Nifty. When the market opened, you had a good pin bar, right? And then it was going little slow, right? So at 9:30, so these four candles are the first initial range candles. We call it as opening range. Okay, so I'll mark that. Let me mark this. I'll take the high of the opening range and low of the opening range. So a high is here, right? So here I'll mark. Okay, and then I'll mark the low of the opening range. So this is the opening range for a study. Opening range means you take the high and low of the first 15 minutes. That is very critical, and that gives you an idea how the market is going to trend. So there is one strategy behind this opening range that is called as opening range breakout. So the whenever the price breaks that 15 first to 15 minutes high or low, that's a time where you can decide whether you want to buy or sell. Okay, you can take a position based on that. This is a very powerful, what to say, support or resistance level. So see, luckily the candle is small here. Sometimes when you have a big candle, then opening range will become a big of range will be too high. So that day the market will be just going within that range. So let us actually uh, mark this opening range after the 9:30 closing, and then see where the market going after that. Okay, so before that, what I need to do is, right, I will mark the previous day highs and lows. That is very critical for us. Okay, let me pick my candles, just the lines. I have these lines, right? So I will take these lines and I will mark the previous day high and low. Okay, this was my high, and then I will mark my previous day low. So previous day low was this. Nice. So previous day low was this. So it's kind of a very forming like a channel, right? So I have now previous day high and low. I have my pivots CPR, and I have my opening range. So all these three I have marked. So at 9:35, you can see the market, even at 9:35, yes, the market has broken the opening range. The candle is just closed above it. But it also touched the previous day PDH, previous day high, but it came down. So that means I need to wait for a confirmation because my next immediate resistance is previous day high. So I want that to be broken. Okay. So next candle I will wait. So next candle almost went up and it came there is you can see the a big formed here, right? So but still it closed above the previous day high. But still I will wait for the next candle confirmation. The next candle clearly opened on the previous day high and it closed above the previous day high. So what I would normally do is I when I see this bullish candle, because it's almost like open equal to low. It's actually open equal to low, and that is one sign of bullishness. And then candle continuously went up. There was no wick formed in his that, right? So that means there is a bullish trend going there. So at the end of this candle, I'll buy a call and then I'll wait for it. So the market goes up. So it went up, went up. So you can decide like by this time if you have take 50 points or whatever is your target, you can book the profit here. You would have got a 50-point profit somewhere here 10.5. Okay, so that's a quick scalping for you. So now we are going to talk about the next supports and resistance which we are going to mark based on the time. And so at 10:15 we will see what is the high. This is the initial range. So what it means is initial range is the first 1 hour high and low that we need to mark. Okay, so I'm going to mark the first 1 hour high and low. Okay, this is my first 1 hour high and the first 1 hour low is this. Okay, so now I have got the first 1 hour high and low, right? So now I have to don't get confused because you see too many points where to you have to mark the supports and resistance. Once we have this initial range, right? This first 1 hour high and low, this is very critical because this high and low always acts as a support and resistance. Market breaking this level means market is bullish or bearish. Like if market breaks it above, then the market is bullish. You can comfortably go and buy the call. Or if market breaks at the downside, you can buy a put and you're going to make minimum 100 points. So that much, these 2 points, right? The initial range high and low is very critical. So I marked that for tomorrow. Sorry, for yesterday's this one. Okay, and I'm extending that till the end. Okay, so this is my initial range. So what happened to the market? Market went multiple times at the initial range, 10:45, 10:50, 11, 10. It was not able to break that initial range. And you can also see it has already crossed R2. It has crossed R1 and R2. So that means R2 itself, crossing R2 itself is a big negative. It's going to weaken the market. And on top of it, it is also having an initial range high. So the market was not able to break the initial range. So after multiple touches, right, I go with this. So it does multiple times it has touched and it is not able to break means I would take it as negative. I will go and buy a put at this candle. Okay. So I'll buy a put in this candle and my target will be this PD previous day high. So this can give a major support. So from here, I will comfortably make 50 to 75 points. Okay, so if you want, you can book your profit at that point at 50 to 75 points, or you can wait to see what happens after that. So here you can book a profit here, or you can wait once it breaks the PDH. That means your next support is comes at the pivot. Pivot here is very narrow here, so that means pivot is not. It can easily break the pivot, or it can be a strong support. So I won't take the risk here. So I will book the profit here, but I will watch the market. So the market comes down and it tries to go near the previous day low. but it is not able to go or break that. So it gets into a narrow range. The market keeps on hovering near the CPR, and it is not able to break the either CPR or go near the PDL, previous daily. So market keeps hovering here. So this is a very good consolidation to look for. Okay, and you can keep watching it. See, but I would take a trade here because it's like a cat on the wall. It can jump either side. Suddenly, a big candle can break the PDA previous day low, and that means a huge bullishness. Suddenly, one green candle can go near PDH previous day high, and they can go in between, right? So I'm not going to get a good trade here. So I want to trade only if the market breaks either PDH or PDL. Okay, without that, I'm not going to do. Again, you have this initial range low also is there. That is also giving a super support here. You see how many times market touched the initial range low. Initial range is that 1 hour low. So it is not able to break that. So I won't take a trade if this in this uh, in this 1 hour, mainly because I have too many supports and resistances here, which can kind of take my trade to a bad position. Okay, so I will just watch. A lot of action happening here, so it's very tempting, but don't get into it. So it all goes up, and the market kind of breaks up. It makes a very good breakout. See, here is where it's little deceiving. Okay, you after seeing this big break and after seeing this as well, right? You tend to quit into a trade. This is unavoidable because, as I said, it has broken all the resistance and it has broken the PDH and then it has formed the candle. Here you tend to make loss because if you had entered here and the next candle, right, it falls and your stop loss will be PDH, you would have hit a stop loss here, right? So, okay, you made one profit in the morning and you would have made one loss here because of this reversal. Okay, so then let us wait, let us watch the market again. So again, the market keeps coming down. Again, same, it is taking the initial range low support. It keeps on going there. And here comes the very big candle. Here it breaks the initial range and also the PDL. So this one candle breaks the two resistance, two support, and sorry, two resistance and two supports, and then it breaks down and it closes below PDL. So this is very good for me to make a trade. So next candle, the red, I can comfortably go and buy a put, and from there you make 50 to 100 points. With very sharp fall. So you can quickly book your profit here. So with this, right, you would have had two profitable trade and one lost trade for the day. So now we are near 3:15. There is a market closing time. Okay, so you close your trade and you are out, and you are made for the day is two profits and one loss, and you have made almost 50 points as a profit. Assuming that your first trade was 50 points and second the loss was 50 points and third trade was 50 points. So you made 100 points profit and lost 50 points. You made a net 50 points profit. So this is one trade that you can look for. This is an intraday strategies and levels that you can look for. So always watch out for this 1 hour high and low. That is initial range high and low, and they give a lot of insights how the market is going to move, where the support and resistance is coming. So mainly, if you can see here, right, the um, market has crossed the R2, but you don't know whether it is going to go to R3, right? And all of a sudden it reverses. Without this open initial range high marking, you will not know why market is reversing here. You can see the candles of finding a lot of resistance, but what is this invisible resistance that is causing the market to fall, right? So that is what you're going to mark it as initial range high. Then you will know why the market is reversing from here. So hope you understood this initial range high, opening range high and low, opening range breakouts, and how you can take a trade with proper decisions. Thank you.